Welcome back to The Explainer. Today, we're diving into a genuinely wild, true cautionary tale about a trader named John. This guy experienced the ultimate financial roller coaster. Touching the absolute peaks of wealth before plunging straight back down to rock bottom. We're going to break down exactly how this happened, step by step, and uncover the hidden psychological traps that can catch literally anyone off guard in the markets. Because, this isn't just about numbers blinking on a screen. It's really about the fundamental flaws in our human wiring that get triggered when money and ego collide.
So put yourself in John's shoes for a second. You're starting out with a tiny account, but you've got these incredibly big dreams of financial independence, right? And John wasn't just gambling. He spent months studying charts every single day. Picture that grueling grind, staring at candlestick patterns late into the night, backtesting strategies, trying so desperately to find a statistical edge, and for a long time, barely making a dime. The psychological toll of putting in hours and hours of intense focus with zero financial reward, it is massive. It's a super relatable starting point for anyone who's ever poured their soul into mastering a complex skill.
But look, this is definitely not your typical feel-good story of perseverance paying off. We're looking at the stark, sobering reality of what happens when discipline just completely vanishes. Turning $1,000 into $1 million is the ultimate dream, right? But losing every single dollar of it, that is a literal waking nightmare. And the reason this matters to you, whether you're an active trader or just managing your own long-term investments, is because the traps John fell into are deeply rooted in our shared human psychology. The exact same mental blind spots that wiped him out are sitting dormant in all of us. All right, section 1, from nothing to something. John started with almost nothing, just $1,000. And for months on end, he was locked in this brutal grind, analyzing thousands of charts, testing indicators, making virtually zero progress. The frustration of seeing tiny gains wiped out by tiny losses is usually enough to make most people just quit. He was constantly second-guessing his strategy. But then something finally changed. That foundational knowledge he built during those really quiet, unprofitable months, it started to align with market conditions. A spark was lit, and the market finally started rewarding his setups. And wow, that spark quickly ignited into a massive winning streak. It started with just one successful trade, then another, and then another. Think about that pure rush of adrenaline, right? That intense dopamine hit that just floods your brain when a plan finally works out. After months of self-doubt, suddenly the market made perfect sense to him. Every technical level held, breakouts followed through perfectly. His confidence didn't just grow, it absolutely exploded. He was no longer hoping to be right, he expected to be right. With that kind of rapid momentum, his compounding wins started to snowball dramatically. His account swiftly crossed $10,000. Then, catching these massive multi-day trends, it skyrocketed to $50,000, and soon it hit an incredible $100,000. The whole perception around him completely shifted. People who knew about his early struggles actually started calling him a genius. He went from merely participating in the market to feeling like he was totally dominating it. His daily routine shifted from cautious, careful observation to incredibly aggressive execution, all fueled by this intoxicating validation that his strategy was, flawless. Moving on to section 2, the illusion of invincibility. I can't lose. This was the wildly dangerous thought that entered his mind and really took root. You see, when you experience a streak of unprecedented success like that, your brain actually rewires itself to just expect continued success. That foundational respect for the market, the caution that kept him grinding and studying charts every day, was completely replaced by sheer hubris. He actually began to believe his profits were a direct reflection of his superior intellect, rather than just a good system pairing with really favorable market conditions. And this illustrates his fatal flaw perfectly. It was a massive mindset shift. His early days were rooted in extreme discipline, rigorous study, and a super healthy respect for risk. But as the profits stacked up, he adopted this really dangerous millionaire mindset. He started taking way bigger positions relative to his account size. And worse, he started heavily utilizing margin. Leverage acted like a double-edged sword that amplified his buying power, sure, but it also amplified his ego. He became completely blinded by overconfidence and just abandoned all the strict risk management parameters that got him his initial success in the first place. Eventually, despite this increasingly reckless behavior, the ultimate dream actually became a reality. His account crossed the staggering $1 million mark. He had literally done the impossible, hitting a return on investment that most pros only dream of. But here's the catch. This massive success created a total, absolute blindness to risk. When you hit a milestone that huge, the ego completely solidifies its grip. He felt untouchable, convinced that the normal rules of gravity that apply to ordinary traders just didn't apply to him anymore.
Now let's get into Section 3, the spectacular collapse.
It all unraveled incredibly quickly, and it started with just one bad trade, which, by the way, is entirely normal. But this is where the psychology of ego completely takes the wheel. Instead of just accepting a small, manageable loss, he desperately refused to close the position. He fell totally victim to the sunk cost fallacy, unable to separate his own self-worth from this single isolated trade. So what did he do? He doubled down on the loser, convinced the market was wrong and he was right. And when it dropped even further, he engaged in revenge trading, doubling down yet again. He was fighting this stubborn, emotional war against a market that, quite frankly, simply didn't care about his past successes.
The psychological breakdown we're seeing here is a textbook case of an amygdala hijack. His entire rise to $1 million was built on quiet confidence and objective logic. But as that leverage whipped violently against him, thousands and then hundreds of thousands of dollars began to vanish in mere days. Under that extreme financial pressure, the logical part of his brain just shut down completely. Sheer fear immediately replaced his confidence, and blind panic entirely replaced his logic. He wasn't trading a strategy anymore. He was just desperately scrambling for survival. Zero. Within a matter of mere weeks, years of agonizing effort, deep study, and unprecedented success were entirely erased. Just think about that timeline for a second. Years of intense discipline to build it all up, and just days of emotional chaos to burn it completely to the ground. But the most crucial takeaway here is why it happened. He didn't hit zero because he lacked trading skill. I mean, he clearly had the technical edge to generate $1 million to begin with. He hit zero because he completely lost control of his own emotions. He abandoned his risk management entirely, and he let leverage utterly destroy him. Which brings us to Section 4, the ultimate lesson. The market doesn't destroy traders. Ego does. It is so incredibly easy to blame external factors, right? Unprecedented volatility, the algorithms, the market makers, or just plain old bad luck. But John's story proves that it's your own unchecked ego that ultimately brings you down. The market is completely neutral. It's literally just a mechanism moving capital from one participant to another. Your ego is that internal voice telling you to abandon your rules, ignore your stop losses, and fight a losing battle. Because at the end of the day, as we've clearly seen from John's unbelievable rise and fall, the biggest risk isn't losing a trade. The biggest risk is falsely believing that you can never lose. So I'll leave you with this. Are you respecting the risk, or are you just feeding your ego?